Hey folks, Chris Versace here. Welcome to today's edition of Thematic Signals. No doubt you've seen that there's a lot going on that is fueling a very high level of uncertainty in the stock market. And as we've seen in times past, that can make for an extremely trying time for investors, one filled with angst, uncertainty, emotion. But let's break it down and discuss and kind of try to figure out where we're headed, at least in the near term. So coming off of what was, we can just have to say it for what it was, a very challenging week for investors last week, we had a combination of things, including the start of Trump's initial tariffs, Fed Chair Powell's comments on Friday that signaled, hey, no near-term rate cut is likely, especially with Trump's tariffs likely to stoke inflation pressures in the coming months. And of course, over the weekend, there was a hopium in the market that we might see some progress on trade deals and maybe even the rollback of some of Trump's initial reciprocal tariffs, but we didn't get any of that. If anything, quite the opposite. The White House was extremely clear that these tariffs are going into effect. And as we started trading on Monday, wow, all of that came together to really push the market lower, much lower. But by doing so, it pushed it into extremely oversold levels based on several market oscillators. And when we've seen that, granted, it doesn't necessarily mean that we're going to see a sharp rebound, but we did see dip buyers kind of step in. Now, our thinking is that the market is likely to remain volatile over the next few weeks. And we say this for a few reasons. First, China, as we know, is pushing back on Trump's reciprocal tariffs, and President Trump is threatening to escalate them even further. So we'll have to see how that plays out in the coming days. Second, the European Union has yet to formally respond with retaliatory tariffs, and reports suggest that they could be targeting the services sector, which would be kind of an interesting twist on things and something we'll have to see not only how it develops, but if it does, to what degree are those tariffs? What are potential responses from, President Trump? Third, while the White House says it has more than 50 countries looking to ink deals, the White House also signaled that these talks are likely to take some time, potentially into late June. That tells us this is not going to be a short road, at least as we see it today. And then fourth, the March quarter earnings season is about to begin. And heading into it, we have seen the initial impact of Trump's first round of tariffs, Canada, Mexico, that sort of thing, impact expectations a little bit. We've seen business uncertainty climbing up. That's not usually a good sign, as well as consumers starting to pull back. And again, not very positive for the part of the economy that is directly and indirectly contributed by the consumer, about 2/3 roughly of GDP. So then you layer in the uncertainty over these tariffs, potential responses by other countries, and we continue to be concerned about not so much the March quarter in and of itself when it's reported, but it's the June quarter guidance and potentially guidance for the back half of the year. Here's the thing. When you look at consensus expectations tallied by FactSet, so far, we haven't seen any real adjustments for Wall Street expectations, particularly for the June quarter. Same for the second half of 2025. Have we started to see them? Yes, we have, only because some investment banks, Goldman, Barclays, Evercore ISI, have dialed back their price targets for the S&P 500. We're seeing them pop up between 5,600 now, 5,900, way lower compared to 6,500, 6,800, even higher at the start of the year. So we are starting to see it, but again, we haven't seen a demonstrative reset in quarterly expectations. So we do think we're going to have to really brace for when companies start to report their March quarter and issue their June quarter guidance. Now, when we think about those four factors, it leads us to think that, yes, the market was oversold, and it probably can bounce from that like we saw yesterday, maybe move a little bit higher. But moving out of extremely oversold levels, that doesn't necessarily mean that we're going to see a demonstrative and sustainable move higher in the market. More likely, it's likely to swing day to day in the near term based on the latest headlines or perhaps even a tweet. We saw that in spades yesterday when the market exploded higher following reports that Trump would instill a 90-day pause on tariffs, only to see the market give it all back and then some once the White House labeled that report as fake news. So our take is that it's going to be a challenging environment for investors, at least until we have more clarity on those 4 issues that we outlined just a few minutes ago. And candidly, depending on how they break, we could see the market move higher or potentially lower. Not very comforting, I know, but here's the simple way that we think about it. The longer the tariffs go on, and potentially the higher they go, the more likely expectations are for the economy and earnings will need to be adjusted, most likely lower. As a result, the longer and higher tariffs go, be prepared for more uncertainty and market volatility. Now, what are we going to do? Well, we're going to do what we always do here at Thematic. We're going to continue to leverage our thematic strategies and take our cues from the myriad signals that we receive each week, and we share a lot of them with you most weekends with our thematic signals. And if you're not reading it, I really suggest you would. There's nothing like this ripped from the headlines confirmation data points to really augment your level of conviction in what you're doing. For us, that of course speaks to our thematic strategies. Now, let's turn to what's going on this week. Well, we do have a modicum of fresh data and developments. On the earnings front, we'll get quarterly results from Delta Airlines on Wednesday. Very interested in what they're seeing as it relates to the consumer. There has been a softening in travel expectations. What's the breakdown between domestic and international? But we've also seen oil prices come down. That could be a bit of a cushion for Delta, so we'll want to check out what they have to say on that front. Later in the week, JP Morgan, Morgan Stanley. Look, given what we've seen with some higher profile IPOs, getting pushed out once again, we're talking Klarna, StubHub, Chime. There could be some, investment banking comments that are not as robust as people were looking for, earlier this year. On the other hand, trading volumes have been extremely strong. But when it comes to JP Morgan, Wells Fargo, and some of the others that have more commercial bank operations, we will be interested on what they have to say about the consumer and loan activity and general economic commentary. We'll also be hearing from Fastenal on Friday. That's more of an industrial play. So what are they seeing in the industrial world? When we look at the ISM data, it's not really telling us that activity in the U.S. is perking up, but what does Fastenal see in terms of the impact of tariffs and retaliatory tariffs, and how does that play into their guidance? That's what we'll be looking for. In terms of this week's economic data, today we got the March NFIB Small Business Optimism Index, and I have to say the optimism is not moving in the right way. We did see declines in key categories when it comes to the economy, and the one area that we're kind of really focusing on here and now, it's the uncertainty index. It continues to chug along at very elevated levels, which we see as a signal that companies are going to be a little more hesitant in their capital spending and hiring plans. So we'll continue to watch that. Wednesday we get the FOMC meeting minutes, and candidly, given what Fed Chair Powell, had to say last week, we don't really see the FOMC meeting minutes having the oomph that they might have had several months ago. Again, Powell signaling that based on the data that the Fed sees, the economy is healthy, chugging along, but clearly signaling that the Fed is concerned about the impact of tariffs, and that more likely than not, there is no rate cut on the table. What's important about this is that the market is kind of looking at 4, maybe even 5 rate cuts in 2025. It tells us, depending on how the data breaks, the market could be once again out over its rate cut skis. But again, circling back to my comments about tariffs, length, duration, if they go higher, very much an evolving landscape. So we're going to have to continue to keep an eye on a lot of this economic data and revisit what the Fed has to say. But at least for this week, we don't think that the Fed is going to say anything different. And I say that as we think about the number of Fed officials that have yet to speak this week. largely, I think they're going to continue, at least in the near term, to reiterate the comments that Powell made last Friday. Thursday, Friday, we get the March CPI, PPI reports. Again, barring anything jarring in them, I think the market's likely to give them a pass. Because as of now, given the timing of tariffs and Powell's comments, it's kind of, in the rear view. But again, we'll want to parse the data, particularly the core data on a year-over-year basis. That is what the Fed is focusing in on. Outside of those earnings and economic data, the only other known unknown that we're going to continue to keep our eyes out for are earnings pre-announcements and what they suggest we're likely to hear as more companies report and update their outlook over the next few weeks. So we may get them, we may not get them. I suspect that given the timing of the start of Trump's tariffs on April 9th, China's reciprocal tariffs on the 10th, and potential fallout after that, I wouldn't be surprised if we start seeing more earnings pre-announcements either very late this week or into next week. The key here is that when we get them is triangulating what they mean, not just for that individual company, but what are they saying about their industry or their subsector, about their customers, their competitors, or even their suppliers. So it's a lot of puzzling, but we'll be up to the task of putting that all together. So be sure to check out our comments. We'll have more coming your way on Thursday. And remember to be sure to look for the next edition of our Rip from the Headlines confirmation points. That'll be out over the weekend. That's your roadmap for this week. Thanks for watching.